There is a point when doing this yourself stops being smart. And most people miss that point. They get a notice from the IRS. They think IRS notices are just reminders. They aren't. Some letters, I gotta admit, they are just informational. Others are warnings. The problem is the letters all look so similar. Same logo at the top right, same envelope, same formal language that you don't know what it means. So people treat them all the same. They shove them in the top drawer. I'm gonna say you shouldn't do that. Early notices are usually soft. The language is kind of a nuisance. Balance reminders, missing return notices, basic requests. These are actually opportunities for you to take the next best step. You still have time, you still have options, and you still have control of the pace of how things go. Then the tone changes. Deadlines get shorter, the language gets firmer, consequences are mentioned. That's when you start thinking, this is where the DIY starts to fail. Because now how you respond matters as much as what you owe. And let me tell you, AI isn't gonna warn you when that time is. One of the biggest mistakes people make when responding is they respond emotionally. They panic, they rush, or they send what they feel is fulfilling, but it's actually partial information. And that partial information creates more problems. When you don't explain enough, the IRS assumes the worst. Another common mistake is ignoring the letter because it feels confusing. Join the club. It's a letter from the IRS. Confusion does not stop the clock. Everything at the IRS works on a systematic clock. Deadlines keep running. And the missed deadlines remove options and they create more obstacles in your way. Here's a simple rule to follow. If the letter mentions appeal rights, levy intent, lien filing, or response deadlines, the light bulb should appear above your head. DIY is over. These letters are not reminders. These are key steps that the IRS takes to begin the enforcement process. And enforcement is not where you want to be if you're in collections. So this is the point at which a lot of people tell me, I wish I would have known that sooner. I wish I would have called you sooner. Not because the situation was impossible, but because these early mistakes made it harder down the road, okay? Another signal that the DIY is over is when the letters start stacking up. And I got a stack right here, all right? Multiple years, multiple issues, multiple deadlines. At that point, you're not solving a problem. You're basically mitigating or trying to manage mitigating risk, however unsuccessful you are at it. People also underestimate how their responses are read. What you say and what you don't say, how complete your response is, all of this gets documented. It's in your permanent record, and that record follows the case. So DIY also breaks down when enforcement is on the table. So by enforcement, I mean wage action. That's garnishing your wages, bank levies, and putting a lien on your property. Once those are in play, you need strategy, not just compliance. Just compliance isn't going to help you catch up. That doesn't mean that you did something wrong. Well, in the past it does. It just means that your situation has reached a stage where years of experience really matter. You see, your goal isn't to avoid the IRS. Your goal is to be in the driver's seat and control the process. And once the IRS is driving, your control is limited. You can try and be a backseat driver, but you're not going to get to the right place at the right time. Here's your takeaway. IRS notices are not all equal. Some are informational, some are decision points. Missing the difference is where costs explode. So keep an eye on those letters. The earlier you recognize when the DIY phase stops working, the more options you preserve. Waiting until the last letter is the most expensive choice.